the 2024 cryptocurrency revival, Bitcoin's leadership, and the road to 2025. Welcome to Crypto Quest. Many analysts are calling 2024 the start of a new bull market for cryptocurrencies. In May 2024, Bitcoin's value reached close to $70,000 after growing 150% throughout the year. Bitcoin breaches $100,000 in January 2025, laying the groundwork for a historic year. This rise is due to institutional interest, spot Bitcoin ETF approval, and better regulations. We'll examine the cryptocurrency industry, why Bitcoin is growing, and expert forecasts for Bitcoin and the crypto sector in this video. Number 1. Overview of the cryptocurrency market. What factors led to the spectacular growth of Bitcoin in 2024, and how does this compare to previous bull markets? In the year 2024, the cryptocurrency market, which is notorious for its inherent volatility, has seen amazing growth. Among the most notable highlights are the meteoric rise of Bitcoin. Bitcoin, which is sometimes referred to as digital gold, has been the most successful cryptocurrency thus far in the year 2024. It began the year at around $28,000, and it slowly increased to reach over $70,000 by the month of May. However, it maintained its upward trajectory, and by the end of the year, it had crossed the $100,000 level. Altcoins rally. Alongside Bitcoin, other prominent cryptocurrencies such as Ethereum ETH, Binance Coin BNB, and XRP also saw big increases. This is referred to as the altcoin rally. At the beginning of 2025, the price of Ethereum hit $3,246. This was attributable to the widespread use of Ethereum's blockchain technology for decentralized finance DeFi and non-fungible tokens NFTs. Market capitalization. The overall market capitalization of cryptocurrencies has surpassed $3 trillion, passing a level that has not been reached since the last bull market, which occurred in the latter half of 2021. Number 2. The determinants of the bull market. The revival of the cryptocurrency market in 2024 may be attributed to a number of different causes, including the following. The approval of spot exchange-traded funds for Bitcoin. One of the most important events that took place in 2024 was the United States government's decision to allow spot Bitcoin exchange-traded funds ETFs. To acquire exposure to Bitcoin without the complexity of owning the asset directly, exchange-traded funds ETFs, such as BlackRock's iShares Bitcoin Trust, have made it possible for institutional and individual investors to do so. Why this is important. Spot exchange-traded funds, or ETFs, make it possible for investors to buy Bitcoin in a way that is both regulated and transparent. The market has received a large amount of liquidity as a result of institutional inflows into exchange-traded funds ETFs. Experts predict that spot Bitcoin exchange-traded funds ETFs may manage assets worth up to $3 trillion by the year 2033 and up to $190 billion by the year 2025. An increase in number of institutional adoptions. As a result of the legalization of exchange-traded funds ETFs, more institutional players have been able to join the cryptocurrency industry. The allocation of a part of their portfolios to Bitcoin and other cryptocurrencies has been initiated by hedge funds, pension funds, and family offices alike. Some examples of adoption include the fact that Fidelity and other asset managers now provide retirement accounts with exposure to cryptocurrency. Beginning in the latter half of the year 2024, Tesla once again began taking Bitcoin as a means of payment for its automobiles. A number of corporations that are part of the Fortune 500 have included Bitcoin in their balance sheets as a kind of protection against inflation. An environment that is favorable to regulatory oversight. Favorable regulatory environment. A change toward a regulatory attitude that is more favorable to cryptocurrencies occurred in the United States in the year 2024. A government that sees cryptocurrency as an opportunity rather than a danger, was elected, which was the driving force for this change in perspective. The most important events guidelines that are more transparent about the taxes and reporting of Bitcoin. Encouragement of the development of revolutionary blockchain technology. Previous suggestions to prohibit mining based on proof of work were rejected, and instead, the emphasis was placed on environmentally responsible mining techniques. Number 3. Predictions about the price of Bitcoin during the year 2025. What is the degree of accuracy that earlier price estimates for Bitcoin have been? And what does this demonstrate about the dependability of the forecasts that are now being made? Many industry analysts anticipate considerable price rises in the future, which indicates that the future of Bitcoin seems to be bright. Based on past price trends and the expectation of sustained ETF inflows, analysts at H.C. Wainwright anticipate that Bitcoin might reach $225,000 by the end of 2025. This prediction is based on this premise. In 2025, Bernstein increased its price prediction for Bitcoin to roughly $200,000, which is an increase from their previous estimate of $150,000. In the first half of 2025, Galaxy Research anticipates that the price of Bitcoin will surpass $150,000, and by the end of 2025, it is expected to reach $200,000 of the year. It may even surpass $189,000, with the potential of reaching greater heights based on the dynamics of the market. Investing Haven forecasts that the price of Bitcoin will fluctuate between $75,500 and $180,000. Number 4. The obstacles and dangers. What are some of the ways that higher treasury rates might be a force that works against Bitcoin and other cryptocurrencies? In spite of the fact that the future for Bitcoin is largely optimistic, there are the following dangers that might have an effect on its development trajectory. Treasury rates that are rising. Historically, risk assets, such as cryptocurrencies, have been negatively impacted by the rising rates of the United States Treasury. If yields continue to climb, there is a possibility that Bitcoin may see negative pressure. Uncertainty regarding regulation. In spite of recent advancements, there is always the possibility that regulatory obstacles may arise. This is especially true in places like Europe and Asia, where governments have adopted a more cautious attitude toward cryptocurrency. Market volatility. The cryptocurrency market is fundamentally unpredictable. In spite of the fact that bull markets may result in enormous profits, they are often followed by huge bear market declines. Number 5. Broader implications for the cryptocurrency market. What changes are being brought about by the expansion of decentralized finance DeFi in comparison to existing financial systems? In addition to being a tale about a single cryptocurrency, the emergence of Bitcoin is also a reflection of wider developments in the cryptocurrency ecosystem. A growing number of alternatives to conventional banking systems are being made available by the decentralized financial industry, which is rapidly expanding. In the realms of gaming, art, and digital identification, non-fungible tokens, NFTs, and Web3 technologies are what are driving innovation. Central bank digital currencies, CBDCs, are gaining popularity, and a number of nations are trying out digital copies of their fiat currencies as part of their pilot programs. Number 6. When it comes to investors, what kinds of methods should novice investors use in order to successfully navigate the present bull market? A one-of-a-kind chance to profit on the expansion of digital assets is presented to investors by the bull market that is now in effect. When approaching the market, however, it is very necessary to do so with a plan that is well informed. When it comes to diversification, you should avoid investing all of your money in a single cryptocurrency. Diversify your holdings across a variety of assets to effectively reduce risk. When seen from a long-term perspective, the cryptocurrency market is known to be very volatile in the short term. It is important to concentrate on the possibilities of blockchain technology in the long run. In order to make judgments that are based on accurate information, It is important to be educated and up to date with the most recent market news and events. Love fashion as much as we do? Share this video and subscribe for more exclusive content and behind-the-scenes stories.